Hey everyone, welcome back to the Kuderna podcast. I'm Bryan Kuderna. So today it's just going to be me, no guest today, and we're going to bring it back to my bread and butter of personal finance. So if you've followed anything that I write about or talk about, in regards to financial planning, you'll probably notice that I always reference a 4-step process. And just to summarize, if you haven't heard this yet, those 4 steps entail protection, liquidity, debt, and then growth. All right. It's an order that we have to follow. We can't put the cart before the horse. So I'm always harping on protection first. All right. We're only as strong as our weakest link. I think any good financial advisor will attest to the fact that mistakes happen. Life doesn't always go as planned. And if things aren't prepared correctly, we're always just one mistake away from, I don't want to say losing it all and be too morbid, but sometimes that's what can happen. We can watch everything around us kind of crumble in the event of some sort of catastrophe that we were not prepared for. So today we're going to talk about protection and in particular insurance. I know it's not one of the most exciting topics, but it is often one of the most important. So we'll spend the next 20 minutes or so cluing you guys into some things to consider. And we're going to focus especially on how to pick the right insurance carrier. All right, that's something in today's day and age that's often overlooked. And I'll talk about why, the different factors to consider, and sometimes where we can make the right choice or the wrong choice. But one of the things we have to recognize is what's a good carrier versus a bad carrier, and how do we pick the right one. All right, so before we dive into that topic, I just want to remind everyone to please subscribe or review this show wherever you're watching or listening. We really appreciate that. That helps spread the good word. And that's how we keep getting all these different exciting guests on here, again, as we discuss wealth in its original meaning, a state of well-being. And we can't achieve wealth if we're not protected. And if we do achieve it, at any given point in time, it could be taken away from us. So we better protect it and protect it well. Here we go.
Is going to require work and time and sweat and toil.
If money wasn't an issue, what would I be doing?
Don't worry about it. You'll figure it out.
Change is the only constant.
The Comdex podcast.
So there's a number of factors that we want to consider when we're discussing what's the right insurance for us. Okay, you think about it, probably the most obvious is, well, what product do we need? Are we protecting us, some liability against lawsuit, whether it's for our family and looking at our auto insurance, our home insurance, our umbrella policies, or perhaps it's for our business as we talk about errors and omissions or medical malpractice and things of the like. That's liability. Then you have, of course, the auto and home. What if the hurricane comes by and rips my roof off? Or God forbid, I get into a car accident. All right, some of those are the more obvious ones. Then for individuals, you have life insurance, disability insurance, long-term care insurance, insurance for pretty much everything you could think of that might go wrong throughout the course of your life. All right, so that's kind of the starting point. What product do we need to plug that gap? And then underneath that discussion of product, there's a lot of different subcategories, okay? Are we looking for term insurance or are we looking for whole life insurance? Are we looking for short-term disability insurance or long-term disability? All right, so there's a number of things that we then have to kind of explore, kind of the subcategories within to make sure that we're appropriately protected. Then beyond the type of product, one of the things that we definitely want to focus on is going to be the language or terms of that contract, okay? This is what sometimes we would refer to as the fine print. And all of a sudden we find out what we thought was covered wasn't covered, or sometimes we're fortunately surprised and we realize we get an extra benefit that maybe we didn't realize was there. All right, so we need to understand the language of our contract, no matter what type of insurance or what type of product that is. All right, those are the things like in the disability realm, own occupation definition versus any occupation definition. Am I covered for my job and my skill set, or am I just covered from doing anything? All right, these are the things that become critical when catastrophe strikes. All right, there's a saying in the insurance business that it doesn't matter until it matters, and then it's all that matters. Oftentimes, I find that when we have these conversations, we're just focusing on the front end, when in theory, it doesn't really matter yet. It's something that we're buying, we're paying money into, and we cross our fingers and we hope that we never, ever have to use it. And if we never have to use it, if we never have to put this product to the test, well, then it doesn't really matter, okay? But in reality, we know that we're not living in a laboratory. And unfortunately, sometimes life goes sideways and we get thrown a curveball. The unexpected event occurs, and then it may be all that matters. All right, so one of the things we always want to think of in any financial planning, but especially with insurance, the crux of it is we want to plan and we want to use a decision-making process as if we are in that moment, when it is all that matters. When something happens and you go, oh my gosh, I don't know if we're going to be okay. And then you pull up that policy that you bought 5, 10, 15 years ago, and you start to actually investigate those terms and see if you're going to get paid when you need it most. All right. So that's why it's so important to look at the language, look at the terms, look at the fine print, and really familiarize yourself with that. All right. So we have the product, we've got the type of product, we got the terms of that contract. And then, of course, we have the amount. All right. That's important. And I'm often telling clients that who you are today is different from who you were 5 years ago. And who you're going to be 5 years from now is different than who you are today. So it's important that we reevaluate these things, okay? What good is it to go get the best disability insurance out there and cover a $100,000 income if 5 years from today we're making $500,000 and we never updated that, okay? Yeah, we might get paid. Everything might have gone according to plan, but if we're getting paid pennies on the dollar, that's going to be a major wake-up call when we have to adjust our lifestyle to, keep pace with that lower payout. All right. So these are some of the obvious things. All right. In insurance, you have the obvious and then you have the not so obvious, and they're equally important. That's the tricky part. Okay. So we know the product, we know the language we want, we know the amount of benefit, the amount of exposure that we want to protect. All right. Some of those things are the ones we can, get on board with pretty quickly. Then the next thing that we have is probably what gets the most attention in today's day and age, especially in the era of online marketplaces and search engines where we can punch in what exactly we want. Then we could screen that by price. And again, if we're just saying, all right, I want to do the responsible thing, I know that I need to protect my family, I need to protect my business, I need to go check this box. A lot of people will then say, all right, well, I'm doing the responsible thing already. I might as well go check the box in the cheapest way that I can. Doesn't that make sense? All right, if I'm getting A, B, and C, get A, B, and C for the lowest price possible. All right, so that's the thing that sometimes seems obvious, but then that can come back to bite us if we don't understand the difference between price and cost, okay? If any of you have read my book, What Should I Do with My Money? You'll notice that in the introduction, I spent a good bit of time delineating the difference between price and cost. And what I mean by that is price is quantifiable. We know exactly what it is. If everything in the world were based on price, then we could just have a catalog of products, corresponding price, make everything a commodity, and it would be pretty simple. All right. But cost is essentially in the eye of the beholder. Okay. Think of it if you were going to buy a $40,000 used Honda Civic. No disrespect to Honda Civic, I used to drive one. Or if you were going to buy a $100,000 new Ferrari. All right. We know just looking at price, $100,000 is way more than $40,000. But for anyone that's even remotely a car enthusiast, you know that $100,000 for a new Ferrari is a heck of a bargain. And that cost is way less than the $40,000 Honda Civic. All right, this is where the term value really comes into play. And cost is only an objection in the absence of value. Okay, I would rather pay $100 for something that I can derive a great deal of value out of than spend $10 for something that's completely useless. All right, so that's something that we need as we start to kind of go through vetting the different products, the different carriers. Price is certainly always a concern. We're never going to ignore that, but we have to understand where it plays a factor in our decision-making process. Okay. And then lastly, and what I want to spend today's episode really talking about and kind of diving into is quality. Okay. And this is really what I would say is synonymous with value. And if we don't understand the quality of the product that we're actually going and purchasing, we don't know if it's a fair price or not. All right. That is not an accurate judgment. So quality is one of the things that I think in the insurance industry is often overlooked. For lack of a better term, it's often discounted, where we just look past that and we say, okay, I got the right product, I got the right terms, and I got the lowest cost. I checked my box and I did it in a very efficient manner, and we're proud of that. That does make sense, okay, on the front end. When it doesn't matter and we're not using that product yet, that's a perfectly logical way about going about the purchasing process. All right. But when we fast forward and God forbid we have to put one of these products into use, now all of a sudden, when, like I said, it matters and it's all that matters, quality is at the forefront. Now we're saying, can we depend on this carrier? Are they going to live up to those promises that I read about throughout my contract that my insurance agent or my financial advisor set up for me maybe many years ago? This all speaks to quality. All right, that's your reliability, your dependability of the insurance carrier. Because always keep in mind, any of these things in finance, and especially insurance, it's just words on paper. Okay, these are promises from a company that if things go south, they are then going to fulfill these promises to help you out in a time possibly of great need. All right. So that's ultimately what insurance is. But at that time, when you go and you ask that carrier, I'm filing a claim, I need help, I'm submitting a claim based on whatever accident it was that occurred. Now you're saying, are you going to uphold your end of the bargain? And this really, really speaks to quality. Okay. Can we rely on that carrier? That's what's critical. That's what I find to be maybe the most oft overlooked, because again, it makes sense. We're hoping that we never use this product. We look at most statistics and we say, okay, the odds are I'm not going to have to use the product. So let me just get it and then go get the cheaper one. I totally understand that. I totally empathize with that. But again, the purpose is we want to buy value. That value is peace of mind. And then the fact that all these years we've worked and we've developed this financial plan that we're proud of as a family or as a business or individual, and we know that it's safe. We know that we put a moat around our castle and we are protecting it. So you say, well, how do you pick a high quality carrier? Okay, whether that be your auto policy, your life insurance policy, your liability insurance, etc. What's a quality one? What is one that you know you can depend on? Well, some are somewhat obvious and some aren't. I think some obvious things are just looking at the track record of the company. How long have they been around? Have they been, fulfilling promises since the 1800s? Or is it an insurance company that was founded, 15, 20 years ago? All right. And that's not to say that a company 15 or 20 years old is bad. Certainly not. But do they have that track record or that staying power, perhaps of a company that's 150 years old? All right. That's a very important thing to recognize. The next thing is going to be the balance sheet and the financial standing of that carrier. Okay. Their credit worthiness. What does their track record look like as far as taking on clients, paying claims, and then remaining not only solvent, but actually thriving and growing and being a company that is in a very good position, especially in regards to having capital reserves and liquidity, so that if, catastrophe strikes, if a Hurricane Katrina comes through and really puts that insurance carrier to the limits, are they going to be able to weather the storm, take care of their insureds, all right, their clients, and then come out the other side still doing okay? So you have to start to investigate these things, or you have to rely on the professionals out there, your insurance agents or your financial advisors, to do their due diligence and to truly understand these things. And if you're just saying, well, that sounds like a lot, and I don't want to do all that, I'm trying to do the responsible thing, but I'm not trying to go investigate the entire industry of insurance. One of the best things that you could do, if I said, you got to look at one thing to really look at quality of carrier, is to look at the carrier's Comdex ranking or Comdex score. All right, that is what makes things a lot easier, a lot simpler, and there's a lot of good validity to what that ranking may be. So let's talk a little bit of what exactly a Comdex ranking is and how that actually comes about. All right. So the Comdex, I should say, is a composite of all the credit ratings an insurance company has received. It ranks companies on a scale from 1 through 100. The higher the score, the better. And the scale 1 to 100, it shows you the percentile essentially that company is. So let's say that a company gets a Comdex score of 98. That means that financially speaking, they're in better shape right now than 98% of the other carriers out there. That's essentially how this score on 1 through 100 works. All right, the Comdex score is generated by a company called Vital Signs. It's a tool owned by Ebix, EBIX, and they're a leading international supplier of on-demand infrastructure exchanges to the insurance, financial, and healthcare industries. So Vital Signs rates over 500 insurance companies based on yearly financial reports provided to the National Association of Insurance Commissioners, or the NAIC, along with ratings from the 5 leading rating agencies. Those would be AM Best, Standard & Poor's, Moody's, Fitch, and Weiss. All right, so you could certainly go out and say, all right, I'm looking at these insurance carriers. Maybe I go onto that website. All right, so I've kind of narrowed things down as far as product, type of product, the language I want to see in the contract, all right, the benefits, the cost, et cetera. So I've done some of these things. And now I'm looking at, okay, which is the most value, the highest quality of these different carriers, right? Or you might do it in the other order. You might say, I only want to work with a really good carrier, and then look at those top carriers and then start to examine the products, pricing, et cetera. Whichever way you go about it, you definitely want to be factoring in the quality of carrier. And when you do that, if you go to an insurance carrier's website, oftentimes they will show you their rankings from one of those credit rating agencies. It might be AM Best, it might be Standard & Poor's, it might be Moody's. All right, those are some of the top ones that you're going to see out there. And then some, not all, will show you or publish what their Comdex score is. And again, that's a compilation of all 5 rating agencies. So it gives you a very good holistic view of how is this insurance carrier doing from a financial standpoint. And naturally, their financial standing is critical when we talk about, all right, I might file a claim with this company next year, or I might file a claim with them 15 years from today. It might be a small claim, it might be a big claim. It might be a one-time incident, all right, like I got sued or something like that, or it might be an ongoing thing, all right, often found like in disability insurance where you say, hey, I suffered an illness or an injury, I can no longer go to work, and maybe the claim I'm filing is for 10, 15, 20 years long that I'm relying on this insurance company to essentially replace my paycheck. All right, when we're going and we're making that big ask of the insurance company to come bail us out, maybe for a long period of time, like I said, you could better believe that their financial standing is critical at that point, and that they're going to be able to look at the terms of that contract and say, yep, you meet these requirements, and we're now going to uphold our side of the bargain. All right, so that's why I think the Comdex is just a nice, easy, simple way to factor in all of this data out there and say, okay, here's where they stand. And then you can factor that into your decision. Now, you might be saying to yourself, all right, well, we're hearing about these Comdex scores. What do they look like for some of the big players out there? All right, and now there's, mind you, a lot of different insurances out there. You have property and casualty insurance, which really speaks to like your auto, your home, your liability, and so forth. What I'll spend a moment on now is speaking more to life and disability insurance, which is probably more relevant on an everyday planning basis for individuals, where households know that they need to protect their loved ones against, any sort of pitfalls or financial obligations they may have. Or even disability insurance is for oneself, taking care of your own lifestyle. So in that regard, when we talk about life and disability, I'll just run through some of the more notable companies that you see out there and that, full disclosure, I've worked with over a long period of time. And I'll just clue you guys into some of their Comdex rankings. All right. And again, I'm doing this in March of 2024. These Comdex scores change regularly. So you always want to try and get the latest data if you can. So these numbers, by the time that perhaps you're listening or watching this episode, may have changed. I just want to lay that all out there. But as I speak today, the latest data shows us the following. All right. So with a score of 100, a perfect score, we have Berkshire Life. That is Guardian Life Insurance Company's provider of individual disability income insurance. Okay, they focus a lot in the medical market, the white collar space. They have a perfect score of 100. Next up, you have Northwestern Mutual Life Insurance Company, also has a score of 100. And New York Life Insurance Company, or New York Life, with a score of 100. Right behind those guys, you have Guardian Life Insurance Company, which is, again, speaking more to their life insurance business, is a 99. And then they're followed by Mass Mutual, which is a 98. And just real quick, in the insurance industry, you often hear about what are nicknamed the four titans of the industry. And that being Guardian, Northwestern Mutual, Mass Mutual, and New York Life. These are four carriers that have been around a long time, all since the 1800s. They are mutual carriers, meaning that they are 100% owned by their policyholders. They are not publicly traded. They do not have shareholders outside of their policyholders. Right? That can be very important when you start to kind of dive under the hood of where do their financial interests lie and what does their long-term standing look like. If they're publicly traded and they have an allegiance to shareholders and Wall Street versus being mutual and 100% owned by their policyholders. All right, so those are some of the top guys right there. Again, I mentioned scores ranging from 100 to 98. Then as we move a little bit further down the ladder, we have Prudential at 94, John Hancock at 93, Principal at 91, Lincoln Financial Group 91, AIG 82, Equitable 82, Ameritas 82, Standard 81, Bright House, which was established by MetLife, 78, and Ohio National at 74. All right, that list there, I know a bit of a lengthy list, but it's actually a summarized version of some notable carriers prominent in both life and or disability insurance, and a Comdex score, or again, a composite of their creditworthiness according to the top credit rating agencies. All right, so definitely a factor to consider. I cannot underscore that enough. All right, so an insurance company's credit rating, again, it's not the only consideration in developing an insurance plan, but it's a critical one. Okay, regarding price, I always say cost should only be an objection in the absence of value. Okay, I cannot say that enough times. So when you think about these things, think about the benefit amount, think about the cost. Definitely don't want to overlook that. We live in the real world where money is finite. We've got to make economical decisions. Look at the fine print, understand the terms, but do not overlook the financial standing of that carrier. Okay, sometimes you do get what you pay for. And again, you're buying a product to bail you out when you and your financial plan may need it most. And at that point, you want a friend that you can depend on. You want a carrier that you know will be there. All right, so those are some factors to consider. Again, always be sure to consult with your financial professionals, your insurance professionals before making any decisions regarding your particular situation. All right, just always have to share that disclosure with you. But thank you again for tuning in. I hope this quick synopsis on the insurance making decision is an informative one. Please go share it with your friends. Give it another listen if you need to. I know this was a quick one, but an important one. We need to protect our wealth, and then the rest we can go after and enjoy and chase what we want in life, build the plan that we want, and know that we are protected and we're doing things in a smart manner. I'm your host, Bryan Kuderna. Thank you for tuning in to another episode of the Kuderna Podcast. Again, please subscribe, leave a review, tell a friend, and we will see you next time.
This podcast is intended for the general public and for informational purposes only. The show does not provide any recommendations or investment advice regarding any specific account type, service, strategy, or product, or to otherwise act in any fiduciary or other capacity. Please contact a financial professional for guidance and information that is specific to your situation. Bryan Kuderna does not provide tax or legal advice. Please contact your accountant or legal advisor to discuss your situation. Guest speakers and their firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, or Kuderna Financial Team, and opinions stated are their own. All investments contain risk and may lose value. Past performance is not a guarantee of future results. References to specific securities, asset classes, and financial markets are for illustrative purposes only and do not constitute a solicitation, offer, or recommendation to purchase or sell a security. Bryan Kuderna is a registered representative and financial advisor of Park Avenue Securities, LLC, PAS. OSJ 300 Broadacres Drive, Suite 175, Bloomfield, New Jersey 07003. Phone number 973-244-4420. Securities products and advisory services offered through PAS, member FINRA SIPC. Financial representative of the Guardian Life Insurance Company of America, Guardian, New York, New York. PAS is a wholly owned subsidiary of Guardian. Kuderna Financial Team is not an affiliate or subsidiary of PAS or Guardian. California Insurance License Number 0K04194.